Next up, we have a fireside chat with Arthur and Alex Chua, CEOs of Goldbell Group and Goldbell Financial Services. They will share a bit more about how Goldbell got to be the mobility leader they are today, as well as how they plan to steer the company ahead in these turbulent times. Well, once again, thank you for being here, Arthur and Alex. Well, we know that you're the third generation of Chuas that's been running the company. And while GoBell, 40 years on, is extremely illustrious, walk us through how GoBell started, as well as how each of you got involved in the business. Perhaps let's start with Arthur.
Thanks a lot. My brother's a banker for 9 years in JP Morgan in Hong Kong, and I wanted to follow his footsteps after I graduated from university. My dad then got a friend to convince me to join the family business, and I demanded quite a high pay, like what bankers would be paid. He agreed. But when I joined the company, he put me in the workshop for 2 years, and I was drawing a salary of around $2,000 a month. So subsequently, I asked my dad, I thought you promised me a high pay. And he said he did, but he didn't say by when. So that was how I got into Goldbell. Started in a workshop after sales business, and then subsequently other positions and departments within the company, then taking on a CEO role of the group.
Well, I suppose that's how your dad got to be such a successful entrepreneur, being very clever with his words, even with his own son, maybe especially so. Now, how about you, Alex? You're the oldest son, but you joined the business quite a bit later.
Yeah, I had the opportunity to actually study in the US. So I've been away since I was 21, just after the army. And after finishing university, I got a job offer in Hong Kong. So I stayed there for 7, 8 years, traveling between Southeast Asia, covering the region. And only about 8, 9 years ago, I decided to come back because there was always a bond on the family table between the discussions between my dad and my father about the business, and I was kind of left out. No? So don't feel very nice, right? So you decide to come back, and I started out, he put me in essentially the most harmless department, right? He put me in marketing. You can't cause much harm there. And then slowly, he let me try being in charge of the leasing entity, until one day during a board meeting, someone asked if we are actually selling trucks to people, who finances the trucks? And we said banks. And someone asked, why don't we start financing our own customers? And that's how the whole journey started. And then 6 years ago, we started Global Financial Services, and that's how it all started.
Yeah, and I understand that you made quite a bit of strides. In fact, you started spending money first before you proved your worth, and your brother had to kind of help you convince the old guard as to why that investment was necessary.
Yes, actually, for me, coming from a bank, right, everything was about data and analytics. So, coming back to the family company, a lot of it was feel and experience. But I always felt that feel and experience, as important as it is, it will be much better with data to back everything. So you actually have to put in the systems, your data collection engines, to actually be able to monitor our businesses better. And that is how we actually run our business nowadays. Like my brother has everything on dashboards nowadays when he looks at his business, which makes it a lot easier considering how much work he has to do. Yeah.
Nice. And so again, 40 years. Walk us through how GoBell started, how it has evolved, and where it is today. Now, Arthur, Alex, you mentioned a bit about GoBell Financial Services. But Arthur, maybe take us all the way back to the beginning, to your grandfather's generation.
Thank you. We have a slide on this. So Goldbell started in 1980s. My father started a company, actually. He named it Goldbell after my granddad. My granddad's name is Jing Zong, so he named it Goldbell. My granddad lent him some money. He started a distribution business, distributing forklifts. So we have 3 pillars under the core Goldbell business. Started distributing products, commercial vehicles, industrial equipment, brands in Singapore, distributing in Singapore. Subsequently, we expanded to Singapore, Vietnam, and Malaysia. Then we started a leasing business, operating lease business. We became soon the largest operating lease company for commercial vehicles in Singapore. Subsequently, we started also a car leasing company, which also became the largest B2B car leasing company in Singapore, and then financial services over the last 5 to 6 years that my brother heads. So that's the core business that we have. We also have a future mobility horizontal. This was started around 5 to 6 years ago as well. And many pillars under the future mobility business, but just to bring your attention to 2 pillars. One is called Venture Build and one is called Venture Invest. This is what I call the twin engines of disruptive growth for the company. We believe that with these two twin engines of disruptive growth, we can repeatedly find S-curves and build new businesses for the company. So this is something very exciting for us now. I recall once a very wise saying by a Buddhist monk from the Mahayana tradition. This was during COVID. It was during a webinar that I heard this. He talked about resilience being the elasticity to adapt to changes. I find it very wise, very true for humans, and even more true for organizations. So one thing that's very important for the company is to always stay relevant in every era of change. That's how we started building companies, venture building. We have venture built 5 companies to date. The first company is called SWAT Mobility in 7 countries now. We solved a problem called the pickup delivery time window problem that moves the most number of people with the least number of vehicles in the shortest time and distance possible. We are ranked globally number 1, 7 countries. We have a second company called X Squared, Xiaoxin. It's an autonomous forklift company, warehouse automation. We have Steer that Chairman Peter Ong mentioned just now. We acquired Blue SG. It's not so much a venture build, but more of through an acquisition, we're adding technology layers on top of the business to make it even more robust. And we, of course, have venture built under my older brother as well, which I'm sure he can share much more. Yeah.
So for financial services wise, we started out just actually financing the trucks of our customers. But as with each GoBell move, we always revolve around what more can we do for the customers. So when you start financing the truck, customers will ask, why don't you finance my equipment? Why don't you finance my car? And that's how we moved from truck financing to all kinds of equipment financing. And then customers started asking, why don't you give me a working capital? Why don't you finance my receivables, give me cash flow? And that's how we, more or less right now, have a full stack of financial services to offer to almost all SMEs available in Singapore. And in fact, earlier last year, I think ESG honored us by adding us as the only private financial institution that can issue the temporary bridging loan that the government is backing 90%. And to us, that was a great honor and a great testament of all the work we have done for SMEs in Singapore. But I wanted to talk more actually about 2 things that we actually have that most people don't realize. One thing that we actually have been working on for the last 2-3 years was to figure out how we can actually add more financial debt and services to actually companies that are not really serviced so much by the local banking system, and those are usually startups, right? So I just ran through our loan book, and I realized that over the last 2-3 years, we have actually lent money and are still lending money to more than 15 startups based in Singapore, which is actually under venture debt, but we never saw it as venture debt. We just saw it as we understood the risk, it was within our risk tolerance, and we have actually done so for the last 2-3 years. This was before the word venture debt even came out. So it was something that we have been doing. So as such, we created this, like my brother said, venture build, that we recently named as Polaris. We do 2 things, right? The first thing we do is we provide debt facilities for startups that require debt to scale. Again, debt to scale. So startups that require debt to scale include buy now, pay later, peer-to-peer, student loans, visas, corporate credit cards. The second one is we enable startups to provide a financial services vertical if they can. So example, if your procurement website, we work with you to build the financing vertical such that your suppliers can get financed earlier and your buyers can get credit. So all these we have been doing for the last 2 years, but we haven't been making much noise per se because it's still in the infancy stage, but we see it picking up quite well.
And that's why we're making some noise about it today.
Yes.
I think we're at that tipping point.
Yes.
Now, help me understand, last year, obviously, we were all assailed by COVID. I read somewhere that, of course, as a family business originally, you want to be prudent at the same time as you are bold and visionary. How do you strike that balance between taking visionary risks and yet making sure that your books are in order? And how do you assess lending to SME startups, some of which might say, especially startups, might be rather high risk?
Maybe I'll go first. So one thing that we did is we worked with SBF to create, and 5 families to actually create this thing called a Hope Fund. It was a $5 million fund put together in literally a day, and the whole structure put together in 2 weeks by my team, where we offered $50,000 loans, 1-year tenor loans, 6% interest rate to SMEs. We made the entire process digital because of COVID, and we dispersed the loans within 2 days. Okay. Next month it's very stressful because the 5 families are actually my friends, and they readily gave me $5 million to lend, trusting me to take care of their money. And I had one promise that I would not lose too much of their money. So next month is actually the anniversary of the 1-year anniversary where the term loans should be paid out. Surprisingly, we have had 0 default. And that was a testament that we actually knew what, my team actually knew what we were doing when we lent the SMEs money, and they needed it fast as a band-aid. But back to your question, right? For us, the first thing we did during the COVID was we looked at our existing customers and we reached out to them and asked them what help they needed. We didn't pull any lines, we didn't cut any lines. In fact, we worked with customers. So one of the things the government actually pushed out was actually deferment of your for hire purchase. For us, we offered any customers that truly required the deferment of hire purchase, including those Grab drivers, and full deferment. We didn't charge them. Actually, we rebated. Now that they've paid up everything, we rebated all deferment interest, all late fees, and we allowed them to actually slowly pay back. And I'm happy to say that as long as you work with your customers and they're being truthful and honest, your book gets back to normality. And so, in fact, our default rates have not gone up significantly throughout the COVID. In fact, it has been almost the same. It's always about communication with customers, right? Everyone wants to survive. You want to survive, they want to survive. But usually, if you pull, everyone dies. So that's what we realized.
Kind of really being that bedrock and building upon that foundation of trust.
Trust is very
Long-term
important.
trust with
yes.
the customers.
Correct.
Thanks. So for me, I think first thing, cash flow, very important. We started this task force for daily cash flow reconciliation for the group. Surprisingly, through very nice measures or cash flow management systems that we have, speaking to customers, our cash flow for actually April, May, and June was constant. That means it was same as pre-COVID levels. So that left us much more comfortable. But it was a very stressful 3 to 4 months, especially during lockdown. So that was one thing that we did. Second thing I think is very important is the people of the family business, the people of the company, how they feel, their well-being, their morale. So one thing that we did also, I sent out an email very early during COVID, even before the lockdown, to let everyone in the company know that all of their jobs will be secured. The company will not let anyone go during the period of COVID. And this brings me to a story that my dad used to tell me when I first joined the company. He told me that when he first started the business, he was losing money, especially during the crisis in the early 1990s. And he wanted to retrench people. Back then, my granddad was still alive. He told my father, why not, don't retrench people, start first by reducing salaries and explaining to them. So my dad followed his advice. All of a sudden, my dad told me back then the government came out with a policy that all government jobs have to be furnished or built with new equipment, not used equipment. So we were distributed for commercial vehicles and industrial equipment. While our competitors retrenched already many of their management team and sales staff, we had a full force in place. We took the market and we became market leader ever since. Never looked back. So that's a story that my dad told me when I joined the company, always reminded me. And I guess that's the culture of the company now, instilled by my granddad and my grandfather. And the third thing I wanted to share is Buffett. Buffett says something very wise, be bold when others are fearful. I think that's a very wise statement. We continuously innovate. We spend money on venture building new technologies, and we continue to invest while ensuring that our cash flow is still healthy. So I guess this is the gist of what we did during COVID. Yeah.
Well, it does sound like as a company and as a family ethos, you really go against the grain in a good way. You know, when a bit like Buffett says, or like Michelle Obama says, when people go low, we go high. when people are fleeing and abandoning their trusted clients, suppliers, staff members, you're holding on to them and saying, we're here for you. And I do see that that's been a huge part of your success there.
Thank you.
Now, moving forward, having said all of that, and I can see that you're both very ambitious people. You want to take the company and your staff and your partners to greater heights. Where are you on to next?
You can go first.
Yeah,
What's in the pipeline?
So in the pipeline, which actually we have not really announced, but we're in the process of setting up a venture debt fund, but not your typical venture debt fund you find in Asia, but more so revenue-based financing that we actually have been already doing for the last 2-3 years, but not calling it by a specific name. We realized that actually, if you look at the startup roadmap, right, you have equity, and then you have commercial capital, but in between, there's actually nothing. You can't keep you raise until you list. Because the financial systems are not deep enough, at least in Singapore, to actually offer these kind of services, not like the US. But what we realized is through Polaris, through our partnerships, we have actually been lending startups money to get them to that stage. And so we wanted to formularize it by coming out with Polaris and another venture debt, where we built infrastructure to actually help startups grow. Again, right, the reason we can do this is because we actually already have the infrastructure on our core lending business that we just need to tweak a bit to actually facilitate this kind of lending for the startups.
Now, since Polaris is so new, let me clarify. Your lending and your venture build, do you focus only on verticals related to your main business of transport and logistics, or are you vertical agnostic?
We are actually vertical agnostic. It's about the risk that we understand, that we can understand. But honestly, for what my brother does and his startups they invest in, we have quite a few collaborations that I can't actually say here, but companies that he invests, if they actually need that, they come to us. And they are actually quite big companies that have been borrowing money from us for the last 3 years. So it's just that we don't really announce it. But you must understand one thing, right? Financial services, although it is one part of the business, it is actually very core to the entire ecosystem that my brother is trying to build on the mobility side. Because it is financing is integral to every part of the business, right? And if we can understand that side of the business, we will lend. Yeah.
So anything doesn't have to be transport, logistics related, so long as you can understand it. And I understand that you also compute it with some of your acquired venture builds like Gen.
Yes.
As a framework, that's part of your secret sauce to evaluating and understanding the risk involved.
Yeah, Gen is actually a CMS license, MAS license, CMS entity that we have relationships with family offices where they invest alongside us for our debt. So that has been quite successful with family offices. Again, it's all about trust, right? Mm-hmm. With the GoBell name, where we co-invest, we don't just pass through deals. We always put skin in the game. And our default rates are, on the Gen platform, is 0 from day one. So that has helped actually get more investors.
Yeah, and it is amazing. Something that I only discovered in my research was that GoBell is actually the largest non-bank financial institution. Right, something that I don't know after today, maybe people will be knocking on your doors now. Now, in terms of other plans in the pipeline, of course, you've just completed the very ambitious GoBell Tuas Service Center, 35 million. You've also been dabbling in a few other things like Ministry of Movement, amongst others. Tell us more, what else is in the pipeline and how do you actually fund the growth of your own business while helping others fund theirs?
Two things. I think when I talked about venture building and finding new S-curves, one of the very key reasons is building deep tech companies require a lot of capital. And you need even more capital subsequently when you want to get market share. And startups are moving so fast. Using the own capital of the company is very difficult. You have large resource constraints. So financing-wise, that's the reason we started the venture build arm. We start raising money from private investors. Every venture build company we raise money from private investors. So that's a very successful model in terms of financing our growth. But there's something I wanted to share that's quite interesting. I would say very. We are starting a new concept, a new fund concept called Cube3. And this is a new fund that when we actually started, we didn't want to be like any other fund in the world. Whether funds are focused on specific industries or specific geographies, we wanted to do something different. And pardon my arrogance, but we want to be something like the next Sequoia of the world, a legacy fund. So we started observing certain gaps in the market or opportunities that are not met yet. And we realized something very unique in Asia. Asia has very, very deep market opportunities. So startups, nice business models, have deep monetization opportunities within Asia, startups. The problem is the technological capabilities of startups founded in Asia are often very, very far from the West, very far from Israel, very far from China, very far from the US. So we have this technological gap. And one of the key concepts of the fund is to set up talent hubs in selected deep tech countries. And these talent hubs will hire the best AI scientists, talents, where when the fund invests in our portfolio companies, the Asian startups that we have invested in get to assess the top talents in these talent hubs. So one of the talent hubs that we're starting now is in Eastern Europe. That's the first talent hub. And that's how we feel we can actually leapfrog the technology capabilities of the startups in Asia, allow them to monetize the market in Asia much faster, and as a whole, build up Asia's tech capabilities multi-generations faster to catch up with the West.
Lovely. It's a bit like a virtuous cycle, isn't it? Marrying the deep pockets of our startups in Asia with the talents overseas in these talent hubs in the West, and then helping them to come back to Asia to be even more successful.
Yes.
Lovely. And with that, I think we have a few exciting questions in the pipeline. So let's get to your public questions. Well, maybe first, any plans for listing GoBell? Thought that might be of interest.
I would say not the holding company. I'm speaking on behalf of the chairman of the company, which is my father. But these days he says, as long as we're interested in the business, he leaves us to what we want to do. And something I wanted to share about my father, not very related to this question, but since you asked about listing, he actually stepped down from the company when he was very young, in his late 50s. And we couldn't understand back then why he retired so early, or at least I couldn't. But as I grew older, he said, if he retires when he's 70, he has no time to teach me if I make a mistake. If he retired when he's in his late 50s, he has 10 years to teach my brother and myself. So that's something very wise of my father, and that's why when you ask about listing the company, I believe he leaves the decision to my brother and myself. In terms of cash, we do not need much cash for expansion of the core business, but we will definitely be listing our venture-built companies. One of the companies already in process of an IPO. The process takes much longer because in the foreign market. So listing venture-built companies, spin-off subsidiaries, yes, but not the family holding company.
Are you able to share which of this venture-built company is that you're speaking of right now?
Swat Mobility.
All right, so look out. You won't be able to get a share of GoBell Group itself, but Swat Mobility, yes, you can. So look out for that.
Thank you.
And another big question of interest is, of course, that announced proposed acquisition of Blue SG, Singapore's largest EV player. People are interested, David is interested in hearing more about your plans with Blue SG and what your grand plan is.
I mentioned a lot in the press when asked, especially exclusive interview with Business Times and also Straits Times, talked a lot about this. But one thing I would like to re-emphasize is every car-sharing business has to be catered or localized to a certain market. And this whole localization makes it important that when you expand the car-sharing business overseas, the tech would also have to be localized to that market. One example I always talk about is fleet rebalancing. So what this actually means is how do you move vehicles to points where the next consumer will pick it up, increasing the chance of utilization of the vehicle. It sounds very simple, and why I say you have to be localized is also because when you move a vehicle from point A to point B, improving the chances of that vehicle being picked up, you must understand the cost of moving it, either by a third party or incentivizing the existing driver to drive it to that point B, and what's the cost to incentivize him to do that, and he has to walk a longer distance than his initial destination, than his initial drop-off point to his final destination. So after understanding that cost, you then have to also understand what's the probability of someone picking up that vehicle and what's the price that that person is willing to pay. So it's a whole understanding of how the market behaves, how consumers behave in that market, cost factors and stuff like that. So this is just one simple example. But we do look very forward to working with car sharing companies. We just had a call with a very, very large one, in fact, one of the largest in the world, to actually consider partnering them in the Europe or US, Europe or Western market and us in Asia, so that consumers for car sharing in the West, when they come to Asia, we become the Asia de facto for them to also do car sharing. So it's a cross-border kind of collaboration. Yeah.
Yeah, so that way it's almost like a portable membership.
Yes.
It's extremely convenient for them. Now, probably on to our last question or second. Oh, sorry, a related question to Blue SG about GoBell acquiring it despite making a loss for the last 3 years. How confident are you very quickly of turning it into profit? And what's the runway you're giving yourself for that?
We expect ROI within 4 to 6 years.
Okay, thank you for that. And you sound extremely confident. Probably
Yes,
going
I
back to the data and the calculations you have on the back end.
Yes.
Now, finally, circling back to financing for Alex, is there still more capacity in the market for financing? Asks Andy, are the banks outdated and unable to participate despite being flushed with cash? And that's
Actually-
why we need a GBFS.
Actually, banks are not outdated. It's just that if you look at the way you lend money, right? The process of doing a $50,000 loan and a $50 million loan is almost the same. So as such, banks would always steer towards the bigger loan because the cost of acquiring and cost of putting up the loan is the same. So with that, for smaller loans, they have program lending and they have a gap in between, and then they go to your larger corps where they actually look at your P&L. So that's one thing that we're trying to figure out, where we try to formularize, like have a Lego sets of products that I can match together for each customer that comes in. So that's the first thing we do. The second thing we do is this whole center part that is, I think, the middle SMEs, right? That you need some capital, but it is hard for the banks to understand. For us, what we try to do is, one thing that is crucial in lending that I feel is that the traditional way of lending is always looking at your P&L, looking backwards. What we try to do, that's why we have Polaris and all this, is we try to look forward. So we will lend you based on your revenue, we will lend you based on your forward projections, of course, depending on how exaggerated they are. And then we will try to work with you and build mutual confidence before we actually lend more. A lot of this is actually built on infrastructure. It's not just on a term sheet. We actually build infrastructure with the startups we invest and we work with, where we actually monitor everything on the fly.
Right.
So that's why our book has been, I'm quite happy to say, zero default for the last 3 years.
I think there's certainly a lot of signs as to why you've succeeded so far in keeping your cash flow and your books very positive and in the green. Looking forward, working on the basis of trust, and of course not forgetting that ethos when you first started, which is kindness and working long-term with your partners, clients along the entire value chain. So with that, thank you so much, Arthur and Alex, for being with us today. It's just been a huge pleasure. And for everyone else watching, remember to tune in and also keep your eyes peeled for what's coming up with Polaris, Cube 3, Ministry of Movement, and many more SWOTs listing as well. Thank you once again.
Thank you.
Thank you.